It's true that people frequently have some level of confusion regarding life insurance. Describe life insurance. Is it really necessary? What is covered by it? My company's insurance policy should cover me right. When it comes to the subject, these typical queries barely begin to scratch the surface. We are all aware that when there is confusion, mistakes frequently happen. But when it comes to protecting your family, your future financial security, and yourself, mistakes should always be avoided. In this video, we will discuss 12 common life insurance mistakes that people make to avoid before, during, and after you buy life insurance so that you can benefit from others' experiences. Before we get started, like this video, subscribe to the channel, and hit that bell icon for pop-up notifications for my next videos. Number 1. Putting off purchases and waiting too long to make them. One of the key factors affecting the cost of life insurance is age. When you purchase life insurance, the cost of the policy goes down as you age. You can save money if you buy something right away rather than waiting. If you wait until you are older to buy life insurance, it might be more difficult for you to get the level of protection you and your family need in the event of the unthinkable. Number 2. Underestimating the amount of coverage you need and being underinsured. Make sure you are reasonable when estimating how much coverage you require. Determine how much money your family will require to pay for immediate expenses like funeral and legal costs, any outstanding debts, and mortgage balances, as well as how much money is required to maintain their standard of living over a period of time that could last for several years. You can use tools to assess your life insurance requirements and make sure you're buying the appropriate amount of coverage. Number 3. Only use the group life insurance you have. Although having group life insurance as part of a benefits package for employees at work is a great perk, the majority of employer plans only provide a basic level and type of life insurance. This universal design might not offer your family and you enough life insurance coverage to cover all of your needs. Additionally, the majority of group life insurance policies expire when you leave your job. You can make sure your life insurance solution is customized to your unique needs by having an individual life insurance policy in addition to your group coverage. Number 4. Ignoring the fact. Life insurance and mortgage insurance offered by your bank are not the same things. Individual life insurance policies offered by insurance companies and mortgage insurance offered by lenders have very different features. Contrary to individual life insurance, mortgage insurance coverage decreases as the mortgage balance decreases, but the premium cost does not. This suggests that the insurance coverage you buy is losing value over time. With mortgage insurance, the lender is usually the beneficiary of the policy, so you typically have no say in how the money is to be used. In addition, if you change lenders, relocate, or sell your house, you usually need to re-qualify for mortgage insurance. Number 5. Believing you cannot afford to purchase life insurance. Term life insurance is designed to provide you with reasonably priced life insurance protection for a set amount of time. The initial term payment is typically less expensive than the price of other types of life insurance products, like permanent life insurance. If you only require life insurance for the duration of the term you choose, it will be the least expensive option, but you should be aware that your renewal costs will be significantly higher if you require coverage for a second term. As a result, the cost savings will increase with the length of the purchase. The best thing about term life insurance is that it enables people with various financial situations and income levels to get affordable life insurance coverage when they really need it, such as when they have a lot of debt, young families, and many financial obligations. Number 6. Believing that a health condition prevents you from being eligible for insurance. Due to present or past health issues, you might not be able to obtain the life insurance you need to ensure the financial security of your family. Simply put, when purchasing life insurance, you might need to be more organized because various life insurance companies may view your health issue differently. Working with an insurance advisor can help you find the best provider. It's important to understand that there are different types of insurance. They could be non-medical life insurance plans like simplified issues or guarantee issues, as well as group life insurance offered by your employer. Note that these types of life insurance typically cost more. Number 7. Purchasing life insurance without doing any homework. By understanding the terms used in the industry and being aware of the inquiries to make prior to purchasing, you can select the best type of life insurance to suit your needs. Ask an insurance advisor for assistance if something you come across during your research doesn't make sense. An advisor for life insurance can help you comprehend the range of products that are offered and choose the ones that might best balance your needs for income protection with your monthly spending plan. He or she can come up with an insurance plan that is perfect for you and your family. Number 8. Underestimating a family member who stays at home. Think about the replacement cost of a family member who stays at home when purchasing life insurance. It is critical to realize that someone who maintains a home and cares for children or another resident, such as an elderly parent, has a great deal of financial value and completes numerous daily tasks that would be expensive to replace. Number 9. Giving incomplete information on your application for life insurance. Some people might be tempted to fudge the truth about their health, lifestyle, or family history on their life insurance application forms in order to lower the cost of their insurance. Please be aware that it is essential that you completely and honestly complete your application. False information may result in the insurance company rejecting a future life insurance claim, endangering your family's ability to make ends meet. Number 10. Failing to maintain your beneficiary designations or failing to designate backup beneficiaries. The designation of both primary and secondary beneficiaries is crucial. The proceeds of your policy will go to the contingent beneficiary you have designated if your primary beneficiary passes away before you do. Without a backup beneficiary, your estate will receive the proceeds, which could prolong the time it takes for your family to receive the money from a life insurance claim. Maintaining current beneficiary designations is important. Reviewing your beneficiary designations on a regular basis is essential, especially after significant life events like marriage, divorce, or the passing of a beneficiary who is not a spouse. To make the process of filing a life insurance claim simpler for your loved ones, be sure to let them know where to find the details of your policy. Number 11. Not regularly evaluating your needs and policy. As you progress through your life stages, your needs for life insurance will alter over the course of your policy. Marriage, having children, and purchasing a new home are all significant life events that affect how much life insurance coverage you require. These events should prompt you to review your life insurance coverage in order to address your evolving needs. Never should obtaining life insurance be considered a once-and-done process. Your insurance coverage should adapt to your changing circumstances. Number 12. Leaving your insurance inactive. Your insurance policy will expire if you don't pay your premiums. Your family won't have any financial security if it isn't in place at the time of your death. Life insurance providers typically give their customers 30 days to submit payment. However, there is no coverage as of day 31 of non-payment, and the policy expires. There may be reinstatement requirements, such as another medical exam, depending on the kind of policy and how long it has been out of effect. By avoiding these life insurance blunders, you can help ensure that you are providing yourself and your family with the financial security and protection they require. That brings us to the end of this video. If you enjoyed this video, please leave a comment and let us know. And don't forget to like and subscribe to stay up to date on all of our new content. See you soon. Thanks for watching.